Yo, what's up, guys? It's your boy, Looney. Today's big moment, the Jackson Hole meeting where Jerome Powell just spoke and the markets ripped. Now my account is sitting at 61,000. I'm up 3.3% on the day, and let's unpack what's going on. But before we get into this video, I want to give a shout out to my Discord. It is free to join. And then I also offer a premium membership that's $8 a month, where it gives you access to one-on-one coaching, trade callouts. I have an option selling course, giveaways, and more. You can check it out. The links to that are in the description. So yes, the markets surged after Powell's speech with almost everything up. We saw crypto up, we saw stocks up, and everything in between pretty much green on the day. And this is because traders reacted to the dovish tone, and now we're looking at a higher chance of a September rate cut. So Powell noted rising risk to the job market and suggested policy remains restrictive, but that the Fed might proceed carefully by adjusting stance if needed. So the takeaway here is that the Fed opened the door for near-term rate cuts without making promises, but it put fuel on the rally. So let's actually look at my portfolio, because I actually did bet on rate cuts, and I did it, I believe, a couple days ago. This is the sort of thing that I give to my Discord, something fun, something different, and I put around $60 for them to rate cut, and I did it when it was at a 60% chance, because a lot of the big banks were saying it wasn't going to happen, and the predictive markets, which I think are a little bit more accurate, were saying otherwise. So I put some money onto it, and I believe it. I believe we are going to see rate cuts, and that's why I put money into it. Not a lot, but I did put a little bit of a gamble, and you can do these prediction markets on Robinhood itself, and there's a bunch of other things. You could do football or something else. But other than that, my entire portfolio was green. Again, I'm up 3%. I locked in that 3% gain, and now my portfolio is at all-time highs of 61,000. So besides just holding, I did take advantage earlier this week when we did see that massive volatility or that major dip, and it paid off because I had Oscar sell puts, I had Mara sell puts, and we could see here these are actually performing really well. Mara itself is up 5%. I have 5,000 locked up in cash collateral. Again, I give these trade callouts to premium members, and all these puts are in a better scenario, and I'm up $50 right now, or $700 in total from covered calls and cash secured puts. And pretty similar look on the Oscar plays as well. This one, I'm positive on my holdings and even my options. My covered call is probably red, but that's fine. My sell puts are carrying the weight. So you can see this isn't about gambling. It's really positioning, taking advantage of that volatility. And crypto, I actually did take a little bit of profits today, not a lot, but just to ease off on that euphoric feeling. I took some Ethereum profit, and again, Ethereum is still ripping through, but it doesn't hurt. Profit's always good. Green is green. So you can see here I took advantage of every opportunity, and I still have cash. I had that cash for an opportunity, took advantage of it, and I still have more cash on the sidelines waiting for maybe a downturn. Maybe things turn around, maybe some kind of news comes out and the market changes direction. But as of now, the market is ripping and not too much volatility right now. We're seeing that support now. We're seeing things kind of flatten out, and as the weekend comes, we'll see where things head. But in summary, Powell signals a possible rate cut in September, and this is where you're going to see crypto and these risky assets really perform well. Right now, it seems like it's already priced in. So when they actually announce rate cuts, or if they do, there's a chance that we do see volatility or short-term dip, which is fine, because in the long term, interest rate cuts are actually beneficial to the market and overall risk on assets. So something like SoFi will perform really well in any sort of market condition, interest rates that are high or low. So I like SoFi. I own 400 of it. It's about 20%. And I have a bunch of covered calls and one long-term leap option. And I even have a debit spread, another different strategy that I give to my option or my premium members. And this one was sort of not a hedge, but at least capitalizing on the bullish momentum. And if it went lower, I have those covered calls to hedge me. So really insane movement from the market over time. And lessons were learned this week: staying agile. You should have a mix of positioning, some exposure, and some liquid ammo for those dips. I wouldn't be able to be where I'm at right now if it wasn't for my buying power. If I was all in, yes, I would have made a little bit more, but I was able to take advantage of these dips, and I'm not too concerned because you could see on the week, I'm up 3%, month, 7%, 3 months, I am up 20, year to date up 21%. So am I really missing out on too much? Probably not. So I'm okay with doing this strategy of having cash, being ready for those opportunities. So let me know what you guys want to see next, whether you want me to break down some more of my trades or different updates. Leave a comment. Until next time,